What's going on, my fellow wealth creators? Matty Ice here. We're gonna have some fun today, doing a comparison of whole life insurance commissions versus investment fees. And I wanted to do this video because hopefully to put to rest once and for all the ridiculous argument that anybody who's talking about whole life insurance is only doing it for the commissions, which is absolutely ridiculous. That's not why I talk about it anyways. I talk about it because it's been a game changer in my life. I see how powerful it can be for the right type of person. Assuming it's a good fit, I want to also help other people set these things up because there's so many benefits to them. But if it was just about the commission, then I would focus on assets under management, not whole life insurance commissions, because as you're going to see here in a minute, when I actually break down real numbers with you, that investment fees account for a significantly higher amount of money over the long run than whole life insurance commissions. It's not even close. So assets under management, like if you're just focused on commissions and making money for yourself, that's where it's at. It's not whole life insurance. All right. Now, here's the thing. I want to set the stage here regarding this topic, because I think this is really important. The sheer fact that there are commissions and fees involved with whatever financial product we're talking about doesn't mean we shouldn't do it or that it's bad or somebody's trying to take advantage of us. Every single financial product has commissions, fees, et cetera, whatever associated with it. So if you have a problem with that, then don't ever buy another financial product ever again. Here's the thing. We need to be asking ourselves a different question. All right. The question we need to be asking ourselves is, are the commissions and fees that I'm paying worth the value, the benefits, et cetera, that I'm getting long term? Am I getting so much more either right now or in the future or both than what it's costing me to do this via commissions and fees? If the answer is yes, then the commissions and fees are not a problem, because we're getting so much more value and so much more benefit than what it's costing us. All right. A simplified way of explaining this would be, would you pay $1 to get $2 back? How about $3, $4, $5, whatever? Every investment's going to have different rates of return and benefits that we get, et cetera. But the answer would be yes. We would always pay $1 to get $2. And in fact, when we pay $1, we want to get as much as possible. All right. But maybe at least $2 in that scenario, right? In that example. Well, if you answered yes to that question, then commissions and fees should not be a major determining factor on whether or not we do something. Now, let me be my own devil's advocate here and talk about the other side of the argument. That doesn't mean we shouldn't pay attention to commissions and fees, because there are bad actors out there that will not set things up correctly, or at least in your best interest, that will significantly increase the amount of money that they get. All right. So that's where education comes in, and paying attention to where our money is going, where our money's invested, is really important. I think that's a huge problem. A lot of people don't know how much they're paying in commissions and fees because they don't understand the products that they're investing in, whether it's whole life insurance or 401k, it doesn't matter, right? A lot of times people don't know how these things work. So how do you know that someone could be taking advantage of you if you don't know at least the basic mechanics of what you're about to put your money into, right? So suffice it to say, what I'm trying to get at here is that commissions and fees, not a bad thing. We just, do we want to manage them? Yes. Obviously, we want to lower them as much as we possibly can to make our rate of return and return on investment that much better, and create more financial efficiency. Okay. But the fact that there's commissions and fees doesn't mean someone's trying to take advantage of you. Every financial product has commissions and fees. All right. So I want to set the foundation with that. Okay. Now, let's actually pull up the numbers here. All right. Now, here's the thing, guys. These aren't exact numbers, but they're pretty darn close. They're pretty conservative. And you can already see the difference in the numbers here. Okay. But I want to share and break this down, like what I have here. All right. So basically what I did is I took the whole life insurance, my first whole life insurance policy. I took those numbers, and that's what I'm using for this scenario. Okay. So in the first year, I put in $120,000 into my whole life policy. I did a large upfront lump sum called front loading the policy. It creates really high early cash value. It supercharges the policy. It's a really great way to set up your policy. Okay. You'll see here though, the first year's commission was $5,436. Now, compared to the amount of money I put in, I would say that's kind of low. I've seen agents who don't design these policies correctly make way more on far less money put into the policy. I'll tell you that. But the reason that the commission is far lower than compared to what I'm putting in is because of how I designed the policy. See, here's the thing. When you design these whole life insurance policies for high cash value, that significantly lowers the agent's commission, which is more beneficial for you because you're getting, not that their commission is lower. I'm saying you want access, typically anyways, want access to as much cash value as you possibly can within the first 30 days. Okay. But when you do that, that lowers the agent's commission. Here's why. There's two places you can, two primary places you can direct your money to in a whole life policy. You have your base premium, which is where the majority of the commission comes from because there's basically zero cash value in the first couple of years from base premium. And it's where most of your death benefit comes from. In my policy, I did 25% to base premium. Okay. And then the second place you can put your money is paid up additions. All right. I think agents make 1 to maybe 3%, depending on the company, on paid up additions. So it's not anywhere close to the base premium. The base premium, it depends on the contract. I think mine's 55%. It can go up to 95%, depending on volume, things like that. Okay. But paid up additions, you don't make a lot of money. And that's why the commission is significantly lower, because the majority of my policy went to paid up additions to get high cash value. So when you custom design a whole life policy for high cash value, commissions are significantly lower. That's very important to understand. All right. And for those of you that are like, oh, he's just making up numbers. No, this was the actual commission. I'll show it to you right here. These are screenshots directly from my bank account, right from Lafayette here. Which is the company I set my policy up with, and that I'm one of the companies contracted with. November 2nd, 2023, $5,436 commission right there. And then I just paid my second year's annual premium, November 5th, 2024, right there from Lafayette, $634.21. Those are the renewals, the ongoing commissions that are typically paid for 8 to 10 years, give or take, and then they fall off. There's no more commissions. All right. So not a huge amount of money. But here's the thing. Again, this is very important. These commissions, actually, you know what? I'm going to save that part. I want to do the 1% investment fee next, and then I'll get back to that point. We'll put a pin in that. All right. But after 10 years, total commission paid $11,142. Now, what I did here in this column, all I did was I applied the 1% investment fee to just the principal. I assumed no growth in the portfolio whatsoever for 10 years. We'll do a more realistic scenario here in a second. Okay, but I was just curious to see what the numbers are. Also, this 1% fee does not mean that this is coming just from the advisor, that the advisor is charging 1%. I'm doing 1% total, like the average amount of fees that someone's paying in an investment portfolio, 401k fees, management fees, advisor fees, whatever, all of that combined. Okay. So 1%. And what you'll see here is in the beginning, the whole life insurance agent makes quite a bit more, but over the long run, which we need to look at the long run because these are long-term financial decisions that we're making here, guys. We can't just look at 1 or 2 years and make the comparison with that. Over 10 years, I mean, you can see the investment fee increasing because it's applied to the portfolio value. Notice that the whole life insurance commission stays the same. It does not increase as the cash value or the value of the contract increases. It stays the same. With the investment fee, that's applied to your portfolio value. So the fees that you pay, while the percentage might not increase, the amount of money you're paying does increase. Now, that's not necessarily a bad thing. I'm not saying to not invest in a 401k or IRA. None of this is financial advice. I'm simply pointing out facts, numbers. These are how these things work. And you just need to be aware of it. My goal with this is to hopefully get you to, if you haven't been paying attention to your money, to pay more attention to your money and know how much you're paying in fees. Because just a 1% fee, guys, can add up to a significant amount of money. Look at this. $23,250 at the end of 10 years. That's twice as much as the whole life insurance agent made. So this argument about, oh, you're just doing it for the commission. No, if I was doing it for the commission or money, I would do assets under management, not whole life insurance. Look how much more money you make on just a 1% fee. Okay. So, way more money. All right. Very big difference. Now, the thing I put a pin in earlier that I want to address now, and then we'll do the 7% example here, is that another significant difference between these, the commission and the fee here is that this commission doesn't come out of pocket to the client. Okay, the commission on a whole life policy is paid by the life insurance company. Now that the commission is the cost of that commission is baked into the policy from the beginning, but when you look at a whole life illustration, those numbers are completely net of cost of insurance, fees, and commissions. That's after commissions are paid on the policy. So everything is net. Versus with an investment portfolio, this comes directly from the portfolio every single year, regardless of the performance of your portfolio. If your portfolio goes down, you're still paying that investment fee. Okay. And again, not the end of the world, not a deal breaker, not saying it's a bad thing. It's just something you need to be aware of. And there's a major difference between whole life commissions and investment fees on a portfolio. Now, let's do something a little bit more realistic. Obviously, the stock market, the portfolio is going to hopefully, increase in value over time. And what I did was I used everybody's favorite average rate of return of 7%. So I plugged that into a compound interest calculator, starting with 120,000 initial contribution, just like I did my whole life policy, and then like 2,000 and some odd dollars every single month to get to $25,000 per month. All right. And you can see, obviously, the portfolio value is going to be a lot different now that we're getting some investment returns here. And that means that even though we still have only a 1% investment fee, management fee, whatever, the amount of money that we're actually paying is going up because it's based on portfolio value. All right. Now, the other thing I want to mention is, like, I didn't want to overcomplicate this. I did not deduct the investment fee from the principal, like the portfolio value here. I just don't feel like putting that calculator together. So this $34,546 after 10 years, it's probably, it is a little bit less than that, but not by much. I mean, you're still looking at about 3 times as much money made on a 1% fee than a whole life insurance policy commission. Okay. So just a very, very, very big difference. All right. Now, the other thing I want to mention about this investment fee, okay, I'm not saying it's bad, just something you need to be aware of, is that when it comes to your wealth, your money, your portfolio, okay, over the long run, and guys, remember, this is just 10 years, all right, as the portfolio value, like when we look at, what if we looked at 20 years, 30 years, now how much have you paid on just a 1% investment fee? Something to think about. That way you're paying attention to the fees that you're paying and asking yourself, are these fees worth the value that I'm getting? And if the answer is no, maybe make some changes. Okay. Because here's what's interesting. Just kind of a side note about these investment fees is that if you look at the results of like these mutual funds that do charge these higher fees and stuff, a lot of them don't consistently beat the S&P 500. So that's where that question really comes into play is the management fee that I'm paying here, is it worth it? Or could I maybe do something better, right? Like if you can't even beat the S&P 500, why wouldn't I just do an index fund with a 0.09% fee versus paying 0.5% or 1% fee to a fund that can't even beat the S&P 500 on a regular basis? That's a good question to ask. Everybody's situation is going to be different, but I just want to get you to start thinking about these things and asking those questions. Here's the other part. All right, I want to go back to this number here. Okay. Now, this number right here, this is just the total amount of actual expenses. Like this is the direct cost of the investment fee right here. But what we're not showing here is the lost opportunity cost of these dollars not being in your portfolio anymore, growing. When you add the lost opportunity cost to that, how much does that extract out of your portfolio? How much wealth have you missed out on because you overpaid in fees? Right? Notice I said overpaid in fees, not completely didn't pay fees. I'm saying overpaid in fees, right? If you look at your portfolio and you see, hey, I'm actually paying like 1.5% to 2%, like what's up with this? And then you drop that by a full percentage point, you can start to see just how much money you're saving and putting back into your pocket over the long run, guys. One of the ways I like to describe this is comparing it to a mortgage, a 30-year mortgage. All right. So if you have a mortgage with so you have a 3% interest rate. Okay, that sounds really good. That's pretty low, especially right now, right? But when you look at like from maybe a payment perspective, that's really good. But when you look at the total amount of interest paid over the 30 years, you almost pay for the house twice. it's like a total interest paid is like 80 to 100%. Maybe that's on a 4%. I'd have to actually run the numbers there, but it's a lot. Okay, you're paying a significant amount of interest over the life of those 30 years. So it's not necessarily the interest rate or the percentage management fee, whatever. It's the nature of what those fees are doing to the portfolio or the financial product over a long period of time. Like how much in dollars is it actually costing me every single year? And so I think I'll go ahead and wrap up with that. I think that was all I had. Let me check my notes here. Yeah, we covered everything. All right, cool. So we'll go ahead and wrap up with that, guys. I hope this was helpful. Like I said, my goal here is one, to put to rest the fact that, these whole life agents, they just want commission. No, if that's all we wanted, then we would do assets under management. Okay. You make way more money, over the long run. But also just to get you guys asking questions, hopefully to pay more attention to where your money's at, how much are you paying in fees, and is it worth it? That's really the most important question. Are you getting significantly more value for the fees that you're paying than what it actually costs you? If the answer is yes, then you're on the right track. Your money, you're doing with what you're doing with your money, what's in alignment with your values, beliefs, mindset around money. And that's your financial goal, and plan. That is totally fine. All right. But, I was talking to a family member the other day, and we started scrolling through his investment portfolio. He had no idea what his money was invested in, how much he was paying in fees, what the fees even meant. And it's like, we're making long-term financial decisions here without knowing where our money is and how these things work. Like, come on, we got to pay more attention to this stuff, guys, or there's going to be some pretty negative consequences in the future. So like I said, hope this was helpful. I would love to hear your feedback, guys. Drop some comments down below. Let's have a productive conversation about this. And we'll go from there. Also, make sure you take advantage of all the additional tools, training, and resources I have in the description. And hope you guys are crushing it. And I'll talk to you in the next one. Cheers, success. Matty Ice is out.